Okay, good evening, guys. Ken at Tortoise Capital. This is the Sunday night podcast for October 11th, 2020. I'm going to give a hat tip to Pavel, who went through and made a nice index of all the 37 strategies videos that we've done over the last couple of weeks. So I'm going to pull those out and make that into a concise, it looks like it'll be about a 6-hour set of videos that go 1 through 46 in sequence. So hat tip to Pavel for doing that work for us. I'll make that available on, I think on the Tortoise Capital site. I'll also put that into Talent LMS for the Platinum folks. And, probably for the, for bronze subscribers as well. That would make sense because it's foundational. Okay, so let's get started here. Okay, so the first trade frame. This is. Let's see if I can remember who put this in. Yeah, this is Pavel getting the work done. Pavel and Ken Hum helping us tonight. Okay. All right, so the first one is on Apple. I'm really liking Apple on a longer term. You notice it has this this almost looks like Kata 2, where we have a low and a higher low, whether you're looking at the RL10 or the belly of the dragon. In either case, we have this 1, 2, 3. In each case, we have the RL10 coming back to the RL270 support level. So this would be the measure of strength. How far can they stretch that away from the RL270? So the other way to look at that too is this. You say, here was the first stretch, the pull away, and in the time that the RL10 moved that far, the RL270 was able to move that far. So that's your long-term benefit. And while that stretch is happening, notice you've got this real nice PSAR that works all the way up. It's pretty close to the RL90 too, if in that matter. So when this one breaks, you get the RLXD here, you're able to lock in this price level of like 125, so you get that plus. And if that's how much you give back, you get to keep almost 3-to-1 over the initial risk. And certainly you keep 2 of the 3 gains back to the RL270. So when you can stretch that far and get the RL10 that far ahead, now when the sell-off occurs, it comes all the way back to the RL270. So this is the improvement, from, call it 85, to 103. That's like plus $18 on 85, which is about that's about 20%. So now that this has held support here, we got that first leg up. Now this move here is only half of the first move. All right, so I think that's just the residual pain and suffering from here. But we haven't had any further failure inside here, and we've necked it down into a really nice tight yellow zone here. and ready to break in either direction. And to me, this one feels like it's up. And I would say certainly the Z1, then maybe the previous Z2 excursion, certainly the hump of the dragon, and then the RL10 up here, peak RL10, and the Z3. So I think there's, I think 140 is in play. So if you can get, this looks like about $2.50 right here. If that's, so if the risk is 2.5 and you're going from, call it 115 to 140, so that's a potential of plus 25 over 2.5 of initial risk. You're looking at a 10 to 1 reward to risk ratio. And in this trade frame, you would get 1, 2, 3, 4 positions in. So this could be a really lucrative trade for not much risk at all. The downside, maybe a second position here. And then if it breaks below the PSAR, this is where I think I'd have a third position. I just think that Apple, long term, I just think, is that really the best thing that I can do to be short? I think that any move that would cause Apple to fail down here to 95 would feature some massive losses in other symbols that don't have as much long-term goodness as Apple. Apple's problem for pension funds and other fiduciaries is that the price had gotten so far ahead of itself that they couldn't own enough of it to reflect its position in the index, because they were limited by the number of shares they could own as a percentage of the portfolio. So that split that just had certainly helps in that regard, makes it a little more ownable. But people just have not been able to buy as much Apple as they really wanted and still be within the restrictions of their funds. So I just think that the upside in Apple is excellent. The downside, I think there's better things to focus on. But that's a really good trade frame right there. Let's see what else we got here. Okay, so that's Apple. Let's take a look at Caterpillar. Yeah, Caterpillar's looking very good. Again, here's Kata 2 in play, higher lows, higher lows, higher lows. And in this case, the higher high got broken right here at 153. So when you have this formation, this is the indication of, on the PSAR flip, that's where you want to be buying at around 150. This is a second position around 153. And we've had 3 days of continuation. And it already got to the previous Z3 excursion. So if this thing takes off, it's just nothing but great. So when you have this kind of this connected series of higher lows and higher highs, now you have this nice upward channel. And that RL90, that green line, that RL90 is really pacing this thing. So I think it's just off and running. And this trade frame will let you get a third, fourth, fifth, sixth position in with markets money, now that there's no resistance overhead. And I think that one's in great shape. The downside, I really don't want to even think about getting short until it breaches below like 150. That would be the Bollinger Band mean and the southern skin of the dragon. I'd add a second position on the break of the PSAR. But, I don't really want to argue with this. There's a lot of people buying that. And this move has really just started because, as you can see, it's been had a long consolidation down here around 120, and now you're just seeing that long-term RL270 starting to really move. So this is really just like leg one of a long-term move. So that move from, let's call it 130 to the peak 155, that's plus 25. That now makes this thing available to go. Yeah, I'd say 170. 170 is in range. If you take 145 and add 25, that gets you to 170. So the legs on this are about $25. So 170 is a reasonable upside target on this move. So it can go from 158 to 170. That's plus $12. That's about an 8 to 10% move, and that's not unrealistic for this great American company. Nice frame. Microsoft. Also in pretty good shape. This one is more of a tactical play. We had this long sideways support level, had one leg up, came all the way back through that support level, has held in here, and now we have a low and a slight upward move and a really strong. So that feels more like it's ready to make another one of these moves here. So I think, 230. Get my calibrated pen here. 230 is certainly in range. So going from 216 to 230 is plus $16. The risk is from 216 to 211, so it's a $4 risk for plus 16. That gives you 4 to 1. That's in great shape. Buying second position here at the Z1, third position on a break above the dragon. So Microsoft is poised to reward. This is one that it's easier to see the downside on, though. So I don't disagree with a short here, a second position on a break of the dragon. I think maybe a third position there, but certainly by the PSAR or by the original belly of the dragon. So yeah, this is one I think can fail because there was a lack of conviction in here. This actually suffered more than most of the text did. That went from 230 down to 195. So call that minus 40 on 240. So that would be minus 15%. So that was a 15% sell-off when the market experienced only about an 11% sell-off. So there was more folks selling Microsoft than were selling the market. So this doesn't have the same kind of buying power or staying power as Apple. So I would say like Apple and Cat, to me, have a stronger upside than Microsoft. So this one is easier to believe in on the downside. So the strategy would be if we saw the S&P going down and XLK going down worse than SPY, and then Microsoft worse than XLK, then Microsoft is a potential short. So good frame. I like that one. PBW, what's there to say about this one other than we loves it? Yeah, the pullbacks have been short and have followed through. This was almost a pullback and then a second leg up. So you got leg one, leg two, closed really well, and all it's got to do is get above 70.6, and off this thing just goes. If you don't already own it, you need to be owning this thing. And I would say even if you took a wide stop and just picked the PSAR, that's call that 61. And if you're buying it here at call it 72, that's a $11 on 61. That's a 15% trailing stop. I mean, that will protect you against any kind of noise reversion. So I'm buying dips on PBW. I think if you wanted to have a tighter stop so you could have a bigger position, I think I would use the top of the dragon and call that 67. So now if you're buying it at 72 and you're risking at 67, that's $5 on 67, which is 113th, 14. Yeah, call it 114. That's about a 7%, risk instead of 15. That give you twice the size. I think that's reasonable. I would be reluctant to short this one. I just think people are going to be buying this on dips for the next couple of years. All right, next one up, NVIDIA. Kind of pricey. We've had the asymptotic move, to 595. Just call it 600. And the sell-off from 600 to 470 was minus 130 on 600, which is 1/4, 1/5. That's about a 20% sell-off. Part of that, the 10% of that sell-off was because of the market. The other 10% sell-off was because of the asymptotic move. So this found real strong support in here and maintained that support. And so 495 is the long-term fair value. So if you think this is overdone because it ended in a doji and you're looking to be short this, I guess you could get short there. Another confirmation would be breaking of the dragon, then the Bollinger Band mean, then the PSAR, then down to fair value, down to call it 500. So you're playing for a 10% weakness right there. And that's only about maybe a $3 risk inside that. That's reasonable. I like the upside better because if this is leg one and holds and leg two starts, then it's aiming for 600 pretty quickly. So that's a trickier one. It's the chip winner right now. I like the long side better than the short. But the fact that it had a 3-day sell-off when the market was actually pretty strong last weekend says maybe this run is done and that really it needs to be at 500 and not at 560. So yeah, I can see this one on the short side. Walt Disney. This one's easier for me to believe in because as a catfish, I like this double bottom. The RL10 and RL10 have rolled over. The winter has become spring, and we're still early in the move. Like we're just hitting the PSAR flip. The PSAR flip is going to hit tomorrow, or Tuesday, I should say. So the risk is going to be, from 125 to 123.5. So it's $1.05 of risk. And then the PSAR flip's going to happen down here. Target 1, 2, 3, 4, and 5. Yeah, I think this is where I would be adding the second position, just because if this breaks, you have this gap. And so if it can get across that gap and go to here, then it's like this is all good. But if it rejects here, I think I'd make sure that I captured something. So I think if it gets above this gap level, across the Bollinger Band mean, then I think it's certainly back. There's a lot of resistance to get through here. So if it can get above, say, 135, this is where it really goes. So getting a couple positions built inside here postures you to be paid really well if it breaks out of this box. This feels like a pretty strong support level that's in play here. It had 1, 2, 3 chances to fail, and it didn't. It kept holding this. So I think the upside is pretty clear, and the downside has a lot of support. United Health, just love it. I think this is factoring in a Biden win right now, because he said he's going to veto Medicare for all. So that's going to be a payoff to Big Pharma, and that's what a payoff to Big Pharma looks like. A buy on dip opportunity, held support at 300, broke out of this at 320. At 3 strong days, closed at the top of its daily range, and is breaking out of the Z3. Off it goes. So with a $5 risk, you have unlimited upside. United Health, that's a no-brainer. The short side is certainly there, because you have all of this front-running move. And so if this fails, it's outside of Z2, so you can play back to Z1 and back to the Bollinger Band mean. So 310 is in play on the downside, and you're getting short at 325, call it. So that's $15. So if you can manage a $5 risk, you have basically unlimited upside, and then there's a $15 target on the downside. That gives you a 3-to-1. And this gives you a long-term, 30-to-1 if the Democrats win, because they're so in bed with Big Pharma. That's a big win. So measured tactical short, longer term payoff. And really, if there is a sell off to this thing and it comes down around 300, that just makes it easier to see on a value play. Here's what that orderly sell-off looks like. It has this size of a move, which is $15. That's 5%. So it experiences 2 5% sell-offs. So a $15 sell-off from 325 to get back to 310 is certainly a good frame. I like that one. Okay. All right, that's the 8 frames that were posted. I'll get this published and posted. I'll do another one tomorrow if there's any additional trade frames posted. I'm probably going to do a series of recordings on either psychology or the it may be the beginning of the systems thinking workshop. Now that the 37 strategies is in the bank, I'm going to work on some of that tonight and get that cleaned up. But thanks so much for your kind attention and hanging in there and being patient. The girls played really well tonight. A team that beat us 10-0 earlier in the season We beat tonight 3-2. So just couldn't be prouder of the girls than I am. They've worked so hard these last 6 weeks. They've really got it done. So take good care, and we will see you in the we'll see you in the podcast tomorrow. Take good care.